It's Matt Simpson here from Forex.com, and I'll be looking at some of the FX majors and the dollar index as we head into next week. Now, looking at the calendar, I'm not expecting a particularly volatile week. Now, we do have, of course, US inflation, but a better read of that is oil prices, which remain elevated. Traders get a little bit fatigued as well of Middle East headlines. Unless we get a breakthrough, then we might find that there'll be some volatility, but not as wide as we've seen in previous weeks. So let's take a look at the charts and make some sense of these levels. Now, starting on the daily chart dollar index, we've got this nice double bottom around 97.50. Momentum's clearly turned higher. Now, given that we've got this strong breakout from this double bottom area, I do think we might be having a move up to 100 eventually. That said, we have now closed this gap that appeared on between the 7th and the 8th of April. And you can see that zooming in, we've got a few upper wicks. There's a bit of an indecision here, so I wouldn't be too surprised if we get a bit of a pullback. So that doesn't necessarily make it a wonderful short opportunity on this time frame at least, but traders could look to lower time frames to potentially look for those setups. I think the real value though could be for bulls to wait patiently for pullbacks, maybe towards a monthly pivot point around 98.50 for a move up to 100. However, don't lose sight of the bigger picture. Ultimately, I do still think we've seen a significant high there on the 30th of April, and this is the end of an ABC correction move. That means moves towards that 100 or the top of this range. I'll be on the lookout for a swing high and a bigger move lower as the weeks go by. The reason being is we had quite a significant high in 2022, a marginally lower high in 2025. And I think this is an impulsive move lower and a correction, which would suggest prices at some point this year need to roll over and break to new lows. Now, looking at dollar yen, I've been eyeing the rally with some suspicion. Cast your eyes back to the 30th of April when we had that intervention from the MOF and a 500 pip decline. 3 weeks later, it's only recouped around 3/4 of that sell-off, which happened literally in a few hours. So I think this is actually a false move higher. I'm looking for evidence of a top, which are beginning to make their way through. Zooming in, we can see we had a 7-day winning streak and this small bearish candle. And then yesterday we had this shooting star candle. What makes it more interesting though is we do have this bearish divergence on the RSI too. We've also got resistance at around 195.50, which includes this high volume node and the monthly R1 pivot point. So as we get into next week, I'm basically looking for some false moves higher and a quick move down. Of course, keep in mind that MF could intervene again. In fact, I'm surprised they haven't already. If they do so, we might be looking at another 300 to 500 pip move to the downside. And as a quick recap, I've got 5.1 and 7.8% here, and they represent two of the prior sell-offs that we saw when the MF intervened. What typically happens when they do intervene is that it marks significant tops on dollar yen, and that's resulted in sell-offs happening over coming weeks or months. So if we get a 5% sell-off again, it's come down to around 152.50. An 8% sell-off, let's call it, is around 148.20. But the reality is we have seen dollar yen fall up to 13 or even 16% after an intervention. Now, the Aussie dollar is an interesting one because it clearly is within an uptrend on the daily chart, which does probably tease bears into going to new highs. However, if you look at market positioning in recent months, particularly recent weeks, we've seen some arguably stretched positioning on futures traders, where asset managers, for example, have had record levels of gross and net long exposure. And I think large speculators were net long at a 13-year high. So that screams to me a one-sided trade, especially when you consider that the Aussie has been in an uptrend against other currencies for about 13 months. Also, add into the mix the weaker employment reports and reduced expectations of a hike, then I think we've got the recipe here for a deeper pullback on the Australian dollar. That said, support has been found and it's now giving clues of a bit of a bounce, at least over the near term. My downside target near this base of the rising wedge was met around 71 cents, and it's holding above the monthly pivot point and 50-day exponential moving average. We've also got this bullish hammer and bullish inside days. There is support around 71 cents for now. Now, if I'm right in thinking the dollar index pulls back next week, that should give a little bit of a bounce for the Aussie. However, I think this is a wave A of an ABC correction. So once we get that initial bounce out of the way, if I'm correct, of course, I'll then be on the lookout for a lower high beneath these highs and a movement down to 70 cents. And then we can then reconsider its potential for a bigger move to new highs. Now, of course, we can't talk about the dollar index without looking at the euro. And if I'm right in thinking the dollar index pulls back initially, then the euro could be in for bounce over the near term. We've had a pretty decent move lower to around 116, but it is holding above that level on the daily close basis. We've got this bit of a doji and this bullish pin bar. So perhaps we'll be looking for bullish setups above this low to move into this resistance zone around 160 around 116.80, in which case I'll be looking for evidence of a swing high, maybe a bit of a pullback lower to 115.50. Interestingly, the British pound has hit resistance, so that's quite a different setup to what we're seeing on the euro. We've seen a quite aggressive sell-off. Support was found at the monthly S1 pivot point, and that's come back and retested the 50-day average and monthly pivot point. Notice we've got this inside candle and a doji to show indecision beneath that resistance level. So I think next week we might be looking for a bit of a movement lower. And what's particularly interesting is we've got a potential bullish setup on euro and a bearish one on pound, and that could bode well for long euro pound. Now euro pound is not my go-to currency, but it's one worth keeping an eye on next week to see if we do get a swing low. We've had 4 consecutive days low, and each of those days we've seen diminishing volatility, and on that 4th day is a very small Victory Man doji candle or indecision. So you should always allow some wiggle room around these levels, but ultimately I think I'm looking for evidence of a swing low above this high for some mean reversion towards the monthly pivot point or the 50-day average. As always, I hope that's useful and wish you best of luck with your trading.